Today, we have a very special guest, all the way from New York, one of the best and the best ICT live streamer on YouTube. It's the one and only Tanja Trades.
You might get married to your bias there and continue trying to short as it's retracing, and then you get stopped out, and now you're mad, and now you're flipping long here. And that's exactly what blows up accounts, and I've been there and done that. If you're trading that, then most likely you're going to be the liquidity. Most likely you will get manipulated out, but there are different rules for that. So I like to wait for confirmation, and this is a little bit more advanced. I don't really love doing that because this part is where you're really building discipline. That is where like champions are born, I would say. Warriors are forged in that time. I want to always get involved in the distribution aspect, and this is the easiest part to trade because with the loss being for such a small amount of time, you already know you're on side. When something like that happens, that's how you know you're in a high probability environment actually.
Welcome everyone back to Chart Fanatics, the go-to channel for all the very best strategy breakdowns with the best traders in the world. Talking of which, today we have a very special guest, all the way from New York, one of the best and the best ICT live streamer on YouTube, trades live almost every single day or every day.
Yeah,
every day?
Pretty much every day.
Every single day, and you've already seen her. It's the one and only Tanja Trades. Thank you for being here.
Thank you for having me.
It's my absolute pleasure. I know we got to do a podcast. How long ago was it? I think it was like almost a year, maybe.
I think it was in August.
Yeah.
Now it's April, so almost a year.
Almost a year, but it's an incredible podcast. But we got to speak about your journey. We were trying to talk about concepts, but that's a bit hard to do, right, on a podcast. So I'm very, very much looking forward today to go through strategies and sort of concepts. But where's best to begin, do you think?
I think today what I really want to tackle is going over the high probability trading days and the low probability trading days and how to avoid the low probability days and save your capital. And I think where we should start off with is talking about how, well, the market pretty much moves in accumulation, manipulation, and distribution. So if we can go ahead and I'll draw that out. So it's like AMD, accumulation, manipulation, distribution. So the first phase is pretty much accumulating. Prices just moving sideways. And then you typically get some sort of manipulation to the downside. And then after that, distribution to a point of interest. So I want to always get involved in the distribution aspect, right? And this is the easiest part to trade because typically price is just going towards the draw and liquidity, which we'll get into later what that looks like. And this is the part that I want to avoid because range-bound action is really hard to trade. And it'll have you scratching your head, it'll have you annoyed and just questioning your life because it just goes back and forth and back and forth. And it'll hit your stop loss and then go back in one direction. It doesn't even typically look like that. It looks like this, right? Making another high and then a lower low and then another higher high and such like that.
Yeah.
That's a seek and destroy profile. So the point is, how can we recognize days like this to avoid them? Or how can we recognize days like this so we can really take advantage of that and use that to really upscale our P&L?
Definitely. So like focusing, as you said, like ranges will 9 times out of 10 actually look like this.
So like what days are accumulation days or low probability days most likely to be part of? It's typically a day where there's no red folder news events.
Got you, yes.
Like if it's just yellow folder or there's just nothing, or even worse, if you're trading like a bank holiday,
Like recently.
the banks are not trading. Like, why are you trading most of the time? It's not going to be a good idea. Or a day after a holiday and there's no news and price is just accumulating for the next manipulation, basically. And so if you're trading that, then most likely you're going to be the liquidity, and most likely you will get manipulated out. That being said, we'll get into like there are days like you can take a trade here and there's different ways of approaching that, but there are different rules for that. So number 2, I would say it's like a day before a large high impact news event such as
Like FOMC, NFP.
Yeah, exactly. Like a super high impact event, which is like day before CPI. I don't really love trading.
Yeah.
Day before NFP, some people like the session, like the day before FOMC is also not really that great too much. Most of the times I'll trade that, but I'll trade smaller size. Day before CPI, I typically don't even I don't even look at the charts a lot of times. Yeah, but why? Because like price is accumulating before it's generating liquidity. And then the next day, you'll see during the 8:30 news, like typically it's something like this, and then just like a huge wick to the downside that knocks all these people out before the actual move. So I want to be part of this move here, not any of this, and then getting what knocked out there.
Of course.
So that's like two simple ways. Just looking at the economic calendar, right? Pretty simple.
Hey guys, just a very, very quick one. If you're enjoying this playbook and you want to get it sent directly to you, make sure to go on chartfanatics.com, put your email in, and every episode we drop, we will send you a direct PDF breaking down this exact playbook. Or alternatively, also, the playbooks will be put all together with the rules over on TradeZella. That is an incredible collaboration. So if you want to actually add the playbook to your TradeZella, make sure you go check that out as well. But let's get back into this episode.
Another thing to recognize, we can wipe that off.
Okay.
Yeah. Another possible day is it's a day after a large expansion day. Like we just priced the day before, just kept going, just dropping lower and lower and lower. And then now we just hit this monthly target where like a monthly liquidity pool, maybe it was a monthly fair value gap or even a weekly fair value gap. And hey, what happens after distribution? Typically we go back to accumulation. And now the price is just doing price discovery, right? So day after a really large move, I tend to just watch price action and kind of avoid. You can reprice, maybe sometimes you can reprice to the midpoint of this, like 50% of that leg up, if there's a good structural standpoint of that, where you see a bullish shift back up. But a lot of times we'll just accumulate and price will just move between the two. So I'm always cautious about that. I'll still show up to the charts, but I'm cautious of that fact that maybe, hey, yesterday was this huge range day and we just hit this really large liquidity pool. Like after a huge distribution, we could have accumulation again. And the point is just to wait for the next setup, not to mess around and find out, like I like to talk about on my stream a lot. So yeah, that's
But it's true, because like what you're identifying is the characteristics, the reoccurring themes of when the market is not really optimum, as you said, like the low probable days. And you can see that if you go to the no red folder days or the bank holidays, like just recently, or when we were recording this, just on Monday, we had a bank holiday and the market was just choppy, just sideways. And then the next day, the volatility started to pick up again, right? And same with the day before news. You'll see the exact same thing, especially on like an FOMC day where it's all the way at the end of the day. Like during that day, you're just going to see range and choppiness. And same with, like, as you said, a large movement after that. You might get, a day, maybe even a follow through the 2-3 days of large movements. But once it's slowed down, and as you say, that's a really big key component, higher time frame, sort of fair value gap or order block, whatever it may be, or liquidity pool. That's a really good point, because this might be 3 days worth of price or like expansion. But once it's been hit, you do start to recognize price. It might go up, but it will just stay within this sort of range. And as you say, what does the accumulation mean? It's building that liquidity. It's building those orders. And then that's where we then obviously head over to the next one.
Right. Yeah. So what we talked about when it's hitting that like higher, price just, this actually happened during the Trump tariff, like
Imagine.
when we were instilling tariffs, there were just huge down days. And this was really easy to trade because it was respecting it was making lower highs and lower lows. And this was a distribution period of price action, right? And then we actually hit this monthly FEG and even a quarterly like order block at level, like the midpoint of it. And then, so like, let's say this happened and then now we have this huge push up from this. This might be hard to trade now because now you have jagged ends on both sides. And I don't really love when price action has jagged ends on both the upside and the downside, and now you're sort of like in the middle of the range. Like, let's say this is a 4-hour fair value gap. Now we came back into at 50%, which I said earlier, maybe I'd aim for that after we hit this liquidity pool in the monthly, right? And now this is back to a 4-hour in around 50% or premium of this range. Now what? Like now we have a bullish one down here. It's like, yeah, we could retrace down to this one, and then we can, like, this is where accumulation is likely to actually happen. We can come down into this one, and people might be now going for this high. Like, and I'll redraw that. We might go down into here, and then people might be targeting this high. But the thing that you have to pay attention to is right now we might actually be in accumulation mode. We might be generating liquidity. So that means that we might not reach this high. We actually might make a lower high and even just make a higher low as well. And that's the tricky aspect. Now we're generating liquidity. We might pause between 50% of this wick on this high. And a lot of times they'll take out another low and then take out that high. And then just, this is a very difficult environment. It is tradable, but it's very difficult. And that's my point, is you have to look at, if there's 2 points of interest here, if price is just bouncing between a 4-hour fair value gap and like an hourly or another 4-hour one on this side, and you don't really know, hey, where price is going to, then it's best to stay out and just wait for that displacement to the upside, right? So I want an energetic shift typically above a swing high.
We say this is where traders like waste trades.
Yeah.
Waste trades in those conditions, and by the time like the good displacement and the good trade comes along, their mental capital is gone, and then they don't execute on that, and that normally just revolves to more and more and more bad habits.
Yeah, exactly. So I'm paying attention to if we're especially if a lot of times we'll reprice at the top of this fair value gap and reject right there, and that might form a nice like lower time frame level, like short. But I'm very cognizant. I'm not going to just aim for this low. This is where people end up holding their trades too long, and then they end up getting stopped out because price is not going to be moving like that anymore. So if you're noticing this 1 hour or 4-hour FEG here, this is a good spot to take some profit. And then that's typically what I do. I'll take a partial profit, and then I put my stop loss somewhere here, break even, and I'll get stopped out on the rest, and that break even, that's fine. In those cases, I'm not holding for a home run. It's understanding, okay, I'm going to take partials. Maybe I'll even be more aggressive with taking partials. I typically always like to leave some percent of my position on because just in case it does go for that low, I want to keep those runners running. And those are the cases that, if you might get frustrated if you're not taking that partial there. And you might get married to your bias there and continue trying to short as it's retracing, and then you get stopped out, and now you're mad, and now you're flipping long here. That's exactly what blows up accounts, and I've been there and done that. That's what, if you have to understand this, like if we might just be bouncing between those PD arrays, which are premium discount arrays. So price in a premium, when it retraced to here, now this is a discount of this leg here. So if price is just bouncing and doesn't really have a direction because of those jagged highs making it harder, it's better to just let it generate that. So now, like, if we stayed out of this and, price retraced here, now it might be generating these equal highs that later on will get part of the move there. But it's really hard to control yourself in these situations. And I think that's where traders go wrong. They marry their biases and they sort of,
because it's easy in this environment to, if you just go through a couple time frames, have very conflicting biases. Like in one time frame you look full bullish, the next minute it's thinking bearish.
That's a great point. So like that's where it is also super important to look at if the time frames are conflicting. That's probably the hardest. It's like, okay, over here, okay, the 4-hour looks actually, we're part of this leg that actually looks kind of bullish here, but here on the daily we're still bearish. Now we're retracing this hourly, and that's bullish. And if it comes down to that, you don't have a clear bias, you don't have a clear drawn liquidity, then that's the best time to kind of just set aside and wait, or wait until you are more confident. That's it. If you don't know where price is going to, you're done. That's like one of the first things on the checklist I'll go over later. So jagged ends on both sides also that we talked about. This jagged end. I really prefer it. We'll talk about those equal highs and lows and other liquidity areas. But that's what there is. So it's hard to read structure on the 4-hour and the hourly chart. Like here, that's difficult, and that means that you might be part of accumulation. Especially what I look at, lack of displacements, right? over swing highs and lows. So typically what you're going to get here, price is probably going to wick like below this low into this FEG and then wick above. These are all wicks, and we're not getting any displacements through. Meanwhile, I want to get a nice push through with a displacement, meaning there's going to be a FEG on the hourly or something above this high. That's how I'm going to figure that out, especially if we turned over this 4-hour bearish fair value gap to the upside and it broke a swing high. That's really indicating to me now we're bullish. And this is where I would want to think, okay, yeah, now I'm really looking for longs. I have a better point of interest up here to go for.
Yeah.
So if there's a lack of displacements there, we're not going above those highs. We're just wicking and returning back into the range. Especially, you can easily see this on the 4-hour, the hourly chart. It'll literally look like barcode action.
Yeah.
So so I'd rather just wait. And it's hard because like that's a 4-hour chart you're waiting on, or an hourly chart you're waiting on. You're gonna have to wait a day or something, typically, or just wait until the next high impact news day, which is probably gonna be later in the week. You know, or another random headline.
So as they say, patience pays. You know.
Yeah.
Patience pays, and trying to get involved when it is choppy. And I get it because like as a trader, you assume, or it's easy to assume, you need to trade every day. Yeah, regardless of whatever, you need to trade every day. But a lot of the time, that's what leads to you not having positive P&L, which is obviously then the opposite of wanting to be a trader and the result that you're trying to get.
Yeah, manipulate. Like the thing is, you can trade accumulation, but especially if you're a beginner to intermediate, it is not recommended. There are different ways. Then you have to go on a smaller time frame. That's harder. It's probably gonna stop you out like once, and then you'll have to try again, and then maybe that second trade will work. But after that, I'm like, all right. If I'm wrong twice, sometimes I'll anticipate that it's going to be a harder day, but I still have an idea on the draw and liquidity.
Yeah. I'm
still going to trade that. And I'm probably going to still, depending on the day, if it's the day before a high impact news day, I'll size down.
Okay, got it.
But I'm still going to take the trade. And then I give myself 2 losses during that session. And if I'm wrong, then that means I either don't have a good grip on the draw and liquidity and I don't have a good read on the market, which is fine. Come back the next day. Or number 2 is like we're in a seek and destroy environment, which is the harder one of those environments where price is just taking out a high and then taking out that low and then maybe generating another something like this and then low and then high. That's a seek and destroy environment, right? If we're taking out highs and then lows, and that's just the easiest way to figure this out actually is seeing that price is most of the time like remaining in the middle of the range.
Yes.
We're actually not having any kind of direction. So that's seek and destroy, or FAFO. People that watch my stream know what we're talking about here.
The inside joke, that's it.
But yeah, so that's the harder part of that environment. That's the time where I'll take 2 losses and be like, all right, there's no direction.
Done, yeah.
Leaving the session. If I thought maybe the draw and liquidity, for example, like here actually is great. If I thought that maybe the draw and liquidity is up here, and I saw, okay, we took out this low here, and now we had a market structure shift to the upside.
Let's take a break for a minute there, guys, because I want to tell you about our preferred prop firm, Apex Trader Funding. Now, Apex is no stranger to the podcast or even Chart Fanatics because we've done 2 incredible episodes with 2 record holders in terms of Trader Kane, who got a record payout at $2.3 million at Apex. And then beating that record in the end was JadeCap, aka Kyle, who also then has a record payout now of over $2.5 million in a single payout with Apex. And that really just shows the infinite possibilities you can achieve at Apex Trader Funding. Now, what traders love about Apex is that you can get up to 20 accounts. So whether you get the 25K account ranging all the way up to the 300K account, you can get 20 of those. So if it's 20 300K accounts, that is 6 million in tradable capital, which is absolutely incredible. Not only that, it's only a 1-phase evaluation, there's no daily drawdown, and up to $25,000 per account is 100% yours. And after that, it's a 90% split in your favor. That's right. At Apex, you can actually trade with Wealth Charts, Tradeovate, and Ninja Trader, so you can choose your favorite trading platform. And not only that, you will actually get real-time data included when purchasing your evaluation with Apex. What I personally love about Apex is that as long as you're trading your day-to-day strategy, you don't have to worry about trading the news. You can actually request your payouts every 8 days, and there's actually no cap to your max payout, which really shows the infinite possibilities you can have at Apex. Thanks to Chart Fanatics, you can get the best offer available at Apex. They are always running sales. So make sure to use the code CF that will automatically give you the best offer available at Apex. The link for Apex Trader Funding is in the description below. So click that link, use the code CF, and you will get the best offer available. Become an Apex trader today. Now let's get back to the episode.
So yeah, this is actually a great example of maybe this is a time where maybe I would take a loss because this is maybe London low, and we took out this liquidity down here, and here we broke this short-term high, and I would maybe try to enter here, stop below this low to go for this buy-side liquidity up here, this high here, and guess what? I just got stopped out, and then price just surged up to that target, and that's frustrating. That's just the kind of environment you're in, and that's just harder, and that's okay.
You have to accept that.
You have to accept that. Sometimes you'll miss the trade. Sometimes, and again, that's why it's more for more advanced.
Well, this is why I loved what you said. Yeah. So in terms of being able to identify what's best for beginners, where to start from, what's best for then the sort of more intermediate, and then also who's best in terms of advanced conditions.
Exactly.
Because you don't really hear of that too often, to be fair. People talk about maybe advanced techniques when it comes to, say, risk and sizing and risk management, but you don't really hear it in terms of conditions.
Yeah, exactly. And you just want exactly. This is the hardest of the conditions. Then there's manipulation where some people like to get involved there. I'm not. I don't really get involved. So if we're just taking out this low, some people would get involved and just buy there before, and if they're anticipating a move up higher, and maybe they'll put a stop on this higher time frame low down here. I like to wait for confirmation, and this is a little bit more advanced. This is where people call them those turtle soups entries, colloquially in the ICT community, because this is it's looking like a breakdown. I think I just watched your podcast for Linda. I loved that's her term for sure. And this might be this is a false breakdown essentially, but people are, if you're bullish, you're buying for the upside, and this is the manipulation, right? I don't really love doing that because sometimes it is a breakdown, and I'd rather wait for the confirmation. For the distribution is again the easiest part, because you especially if you recognize this jagged end down here as manipulation, then you have a clear direction to go for up here. So that's what we'll go to next, distribution.
Definitely, yeah.
Yeah, so finally we're going to go into the distribution days. So the high probability days are mostly going to be red folder events, folder event days. And I've talked about this on my stream, CPI is my favorite day. I'm not trading the actual release of CPI. I'm trading the New York session afterwards. So that's one of my favorite days to trade. CPI, NFP is not bad to trade either, but even PPI, GDP, NFP I'll trade honestly. Again, but these are less trend-like days, so it's not the easiest. What else do you have? You have after FOMC, I'll trade that.
Yeah, definitely.
I'll trade the aftermath of it.
It's actually really good. It's clean at times, isn't it?
Yeah.
The CPI is your favorite.
Yeah, I think I mentioned this during the podcast. And we'll see. You could just go to my you can literally just go to my channel and you type in CPI. I'm most of them are winners. It's just because that's my favorite day. Those are the days where I'll go for larger wins because we're in distribution mode and price is following those. Respecting, I could move that stop here and then it's making a lower low and lower high, and I can go for that huge win where my runners really make me a ton of money. I've made 200 points, 100 plus points several times doing that.
Incredible.
And those are fun, right? Then we bring out the money gun on the stream and we have some fun a little bit. But that's the point, is that these are the distribution days are easier to trade, bigger winners.
Would you say there's more confirmation behind the distribution segment of it? because you've already had the accumulation, you've already had the manipulation.
Exactly. Yeah, there's more. Yeah, there's way more confirmation because you see the manipulation, and if you have a target in mind, then it's easier. So how are we going to figure that out? And the easy way to find the drawn liquidity on these days is that price is jagged on one end. Let's say this is a daily fair value gap, and it took out previous day high. And now we're having a 15-minute time frame shift here, or even like a 5-minute, 1 minute, depending on what kind of trader you are. But we have a 15-minute shift here, and then, then there's a retracement into a 15-minute fair value gap. And the point is here, we already had that shift, and downwards down here, maybe there's a 4-hour internal liquidity, 4-hour in a discount, which we're going to go for next, because this leg back down, we never actually retraced to equilibrium of the range. And this I really like as a potential liquidity pool, even if if this previous swing low did actually reach into it, but didn't completely fill it. So we can draw that like this. But we took out this high into that fair value gap. A lot of times I am actually looking for this. Ugly. Okay. A lot of times I'm actually looking for this is a drawn liquidity. This is a short-term low with more liquidity beneath it because we didn't actually completely reprice this here. So then I'm looking for price to come all the way back down here, and I'm entering up here, and that's an amazing RR situation. And it'll get you 200 points, on the NASDAQ, which is fun. It's fun. It just simply is fun. Even when you're trading for 5 years, like me, it simply is fun, especially when I'm latched.
Can't be that feeling,
Yeah. Yeah. I mean, it's just, at that point though, it's not euphoria anymore. It is more of
you did a great job.
Look,
because at that point you'd waited.
Yeah, exactly.
You'd waited through this, been patient, and you executed properly. And plus, at the end of the day, most people, they're not profitable in the market. So if you're able to be profitable, that feels good. Especially, as you said, after 5 years, at the end of the day, if you're able to consistently be able to hit these sort of trades, and even if they're not every day, you're hitting those home runs, if you will, or those base hits. Sorry, I think they say that. You're hitting those base hits, and then you finally, get your distribution done, you get your home run. Of course, it's going to feel good,
Yeah, exactly. Especially if you've waited. Yeah, if you waited.
Especially with live streaming as well. You got an audience to watch you.
I know. That's where part of it is. Yeah, and it's fun. It's part of the fun, of course. But yeah, that kind of, I'm looking for that in liquidity oftentimes, especially if we have this imbalance and we made one short-term low here, but we didn't completely reprice this, and everything's looking good on the lower time frame, right? This is how this looks like on the 4-hour, the daily. But if you go to the 15-minute and you kind of zoom into this area here, and that's typically where you're going to see the accumulation mostly, which is day before CPI, you're seeing this, and then during that 8:30 spike, that's happening, and then we kind of retrace, and then we're dropping, and then you get this clean continuation lower.
Here,
and that's basically how that goes.
Because the key points here is that you're looking for this AMD, right? You're looking for this.
Yeah.
But it's understanding the context, right?
Yeah.
So you have your daily, the manipulation will hopefully take us into here. You've also taken out, obviously, a prior high, it might be a daily high, it might just be an external liquidity. And then you're looking for this. Rather than a lot of people make the mistake of this is a great concept, let me go look for it. And they're looking for it here.
Exactly. Yeah, exactly. They're looking for it here, and they're kind of many times they're not realizing, okay, we just dip down into here, and we have this daily tap. We have this daily buy side liquidity that hasn't been tapped yet.
Exactly.
And you might get wrecked there.
Exactly. Yeah. It's the positioning alongside of obviously keeping track of which part of the market we're in.
Yeah.
And we're going for the distribution, but it's understanding that this pattern, if you will, this concept will only play out. Well, it's not that it will only play out, but the best times for it to play out and where you want to be interested is in these high time frame areas after liquidity's been taken or displacement's taken place, so that you can then look to capitalize on that. Because again, people will each day, let's say this is 3-4 days worth of price action to get to these highs. Each day they'll be looking for it. each day that we're looking for it versus like if you save yourself as you set out from the very beginning of the episode for the high probable days, that's where you're going to have a much better time, you know, a much better performance hopefully overall, and it'll feel better as we talked about just now. Like that's when it'll feel good. Versus the problem is if you do this like each day, you take a loss, even if you end up taking the win. You won't feel good because you're probably just covering the loss. Exactly. And then it feels like a waste of time, right?
Yeah, exactly. Yeah. Exactly. So it's this part is where you're really building discipline.
Yeah.
Like that 100%. Is where like champions are born, I would say.
100%. That's a great way
you're
of saying
forging, it. Warriors are forged in that time.
That's great.
Yeah. Okay.
Amazing. So we're going to go over the pros and cons now.
Yeah.
And just to, make sure everyone's clear. Cons-wise, we don't mean it's like a bad thing. It's normally just like a hurdle or something to be aware of. Yeah. When it comes to implementing this style of trading or this strategy. Do you want me to cover the con side?
Yeah, sure. Well, like pros.
My very poor handwriting in comparison.
Okay, so the pros, it gives you an easy like checklist.
Yes.
To check each morning, and we'll go over that checklist and give that to the audience as well. It's pretty simple, and it's an actual just logical thing to follow in the mornings to say, hey, are we potentially in a high resistance environment where it's a lower probability day, or is it potentially going to be a nice clean move? Okay, so that's one. So that's pros, checklists, like that checklist in the morning. A con is, what we talked about. Sometimes price actually like doesn't manipulate and it'll continue running without you. And you might feel FOMO, like, it just continues without the manipulation.
Continues that trend.
And without even retracing or anything. And then controlling FOMO is difficult. So you have to staying disciplined. Yeah, disciplined, I would say.
Let's take a break for a minute there, guys, because I want to tell you about our incredible sponsor, TradeZeller. TradeZeller is the #1 trading tool in the entire trading industry. TradeZeller allows you to become a more profitable trader, allows you to make immense progress as a trader, no matter if you're a beginner or an advanced level trader, because it makes journaling easy. It makes journaling something that is fun and enjoyable and something that is interactive. So no matter if you're a crypto trader, no matter if you're a futures trader, no matter if you're a Forex trader, no matter if you're a stock trader, all you have to do is select your broker, your platform of choice, and connect it to TradeZeller, and it will automatically sync your trades and pull all of that data onto the dashboard, making journaling and finding your edge and adapting your edge so easy. In collaboration with TradeZeller and Chart Fanatics specifically, we are actually getting the playbooks from the episodes that we're filming with these incredible verified traders and adding them as playbooks onto TradeZeller, so you can actually go on there and see the rule sets already predefined. So make sure you check that out as well. Now you can actually get 10% off your monthly subscription using CF10 on TradeZeller right now. But more importantly, I would say CF20 for 20% off your yearly subscription with TradeZeller. The links for TradeZeller are in the description below, so make sure you go check them out. Use CF20, get 20% off your yearly subscription, become a better trader today. Now let's get back to the episode.
Another pro is like you can anticipate a difficult day before it even happens. Like it happened on my stream. This week has been a little bit difficult because you have like a random headline and then it takes out my buy side liquidity target. And I'm like, oh, well, I wanted, like, this is basically what happened this week during my stream. I'm like, okay, this is the buy side liquidity that I think we're going towards. I would prefer it if we, take out this low first and then take out that buy side.
Yeah.
And price, actually, what ended up happening was we just
went straight.
We went down a tiny bit during 9:30, and then there was like a 9:37 a.m. random headline that just popped NQ up like 146 points.
Why
took
not?
that out, and I was like, okay, well, that's scratched, so that ties to like FOMO. You have to control that. So I think that's a con, is like FOMO is a potential thing that you have to definitely control your emotions for. But other than that, you can anticipate a difficult day, a barcode day.
Yeah. It's a low probable day,
Low probable day. And same thing, you can anticipate a potential banger day. Is that what we call it?
A really good day,
where you have like large amount of points.
high
points.
volatility, yeah.
Points, captured, yeah.
And just for the con side, it might not present an entry, right?
Yeah, that's exactly. Yeah, sometimes no entry, especially if you're waiting on a retracement and you're a retracement trader like I am. Sometimes that happens. It barely retraces and it just goes straight for your target. And you just have to accept that and wait for the next setup, and that kind of sucks. But that's just gonna happen. That if you have a long trading career, like I always think about in the higher time frame of things.
Yeah.
There's gonna be so many days where I take a trade and it stops me out break even, then it flies to my target. Or there's a trade and I don't get an entry and then it flies to my target. That actually happened the other day. I missed the limit fill by like maybe 5 points or so, and it shot up. But like, what can I do? That's not my process to wait for that retracement, because when it does come to that limit fill and it wicks it and I get that sniper entry, that's delicious.
Nothing beats that, yeah.
Nothing beats that feeling, yeah. But so in those days you get a large amount of points captured, and you feel more confident holding then, because you've done all this work of noting these potential days that could happen. Like I don't know, miss a move. Sometimes you'll miss a move, no entry. Trending day, no FOMO, and sometimes you'll be wrong. You know, that's not 100% win rate. You know,
exactly.
You have to make sure that 2 stops and you're done for the day. Because then there was one day actually that CPI, I'm not 100% win rate for my CPI.
Of course,
but it's pretty good. It's like probably like 70 to 80%. And there was like one recent one where, it was a high resistance run during the morning, and then after 11, it started really distributing. Nothing's 100% win rate, of course.
Definitely.
But yeah, that's why I say like 2 losses and you're done, because you just got to accept it. Otherwise, you can really start
3, 4.
Yeah. You're done.
There can be the case where, the accumulation, you're expecting it to manipulate and then obviously distribute, but it just stays in that accumulation phase. And if you get kind of attached to like, it needs to manipulate, it needs to distribute, and you start, so sometimes it's like it's not ready yet, and you just have to be patient.
Or does a second manipulation. Like sometimes that'll happen.
Definitely.
And price doesn't always move exactly the same way. The point is finding a potential process and just follow that through and let the probabilities play in your favor, so that your wins, that's the point. It's like your large amount of wins, like points captures, totally makes up for any little paper cuts that you might have taken during accumulation area, because you're not going to always predict it perfectly,
Definitely.
So, yeah. So we talked about earlier about the checklist. So let's go ahead. Okay, checklist. So number 1 is checking the economic calendar.
Yes, definitely.
News events.
You'd be surprised how many people don't.
I'm telling you, when I was a newbie, I did not realize what FOMC was. And I was like, what is that everyone talking about?
Yeah. Why is the market moving?
Yeah, exactly. No, seriously, if the news events, and for that, you can easily just check, Forex Factory or investing.com, and there's many different free options for that. So are there news events? Are they red folder? What was this? Okay. Number 2, I think that's actually we didn't touch upon until now, but like, are the markets correlated? And I'm talking about like NASDAQ and the S&P 500 and even the YM, the Dow Jones in this context. But in other contexts, you can look at, the pairs, and that are typically correlated. Are the markets correlated? So typically, I want ES and NASDAQ to look similar in structure.
Of course, yes.
And sometimes they're not. Sometimes, I think the worst, this is a tip, sometimes the worst situations are the NASDAQ's looking quite weak, while ES is ranging and looking kind of bullish, and that's weird. And then meanwhile, YM is really the strong sister there. And then you're like, all right, well, what? You don't know what to do. Sometimes ES might look like a bullish situation in that sense. And this is actually a pretty low probability situation I'm talking about right now, is if ES is a bullish scenario, a lot of times it will retrace, and then, oh, NASDAQ is really just pulling it down. It'll pull it through, and then maybe they'll start correlating afterwards. So if you had actually waited for that, you would have been in a much better situation. But sometimes, especially after a large range move, a large range move the day before, that's going to happen where they're not correlated.
Yeah.
And that's where those divergences where, oh, NASDAQ took out this low pre-market and then ES did not. So let's draw that out. Actually, it's going to be good. And those are the situations that maybe like when people look for divergences, they look at oh, NASDAQ took out this low pre-market, but ES did not. It remained higher. But then you see very quickly that there's divergences on both sides, and you're going to see, oh, wait, like NASDAQ did not take out this high, but ES took out this high now. And then that's where it starts getting confusing. And you're like, okay, this is those situations where looking for a divergence for a potential reversal situation where in the past, maybe you would look for that. Oh, that's potential manipulation to go higher.
Yeah.
That's not going to end up working out because they're just not correlated. They're just going to continue like this, like that. And
Yeah.
That's where SMT's smart money technique divergences won't work. When the markets are not correlated, then that's not going to work. Yeah, so that's a tip there. The markets are not correlated. You're going to have a hard time.
Definitely. Yeah.
Because, those are ES and NQ are sisters, and they should be, one of them's always a little bit weaker and stronger, and the NASDAQ will move faster, and NASDAQ will typically take out those lows and highs because there's just more manipulation and it moves a lot quicker.
Yeah.
But if they're not looking structurally similar in that fact, then yeah, that's what's your idea really based upon in that sense. Well, the third thing is obviously is the draw on liquidity. Can you frame a draw on liquidity? Can you see where the market is likely heading to based on what we talked about on those structures, equal highs? We're aiming, that's a manipulation. We're aiming for those equal highs or some other buy side above or fair value gap above. Do you have an idea where the market's going to? If you don't, then it's best to sit back. What's the point? You don't have a trade. Please do not try to make something up on the 32nd.
Oh, wow. Yeah. I remember those days. That's it.
And yeah, so that's what we're talking. I'm going to talk about the drawn liquidity a little bit better there. And so equal highs or equal lows, or like we were talking about, an imbalance on a higher time frame. So like a 4-hour FEG maybe, or daily FEG, and then what I talked about before, like those short-term lows with liquidity below, liquidity still below.
Yeah.
Or short-term highs with liquidity above. So that would look like you have this FEG here and took out that high, and that's a short-term low, and it didn't fill this in yet. So that's a potential liquidity target here. Or with highs, short-term highs with a short-term high with liquidity above.
Yep.
Short-term for the short-term high would be like, and then we took out some liquidity here, and then we have a daily FEG above this short-term high. It only filled in a little bit, and now price is bullish. We just hit this other level, and this is my liquidity target up here. That's I like those as well. But if everything is kind of difficult and you're wicking both ways, that's a clean, obvious way that there's not really price action to go with.
Definitely.
So yeah, so that leads me into the next thing, number 4 actually. Yeah, number 4 on the checklist is displacements, right? That we were talking about before.
We were, yes. Yeah.
We want those energetic shifts. Yeah, we want those energetic shifts in structure where highs are taken out with displacements. This is like a FEG. It's a clear potential area for us to continue up higher versus us just kind of on the lower time frame. It's just going to look like this, it's wicking that and then reverting back into the range. So that's important to take note of. And that also leads me to here is like, are FEGs being respected on the higher time frame? So if this wasn't respected here on the higher time frame and it just kind of dips below and then it makes like a bearish one, let's say it dips below that hourly fair value gap. So I'll redraw that. And now we have a bearish FEG there. And some people call this like a BPR area, like a balanced price range area.
Okay.
And then so they might be looking for shorts, but we looked at overnight. We didn't even respect that either. That's showing that FEGs are not respected. And so that might be a difficult market because even on the higher time frame, they're not being respected. Then why should they on the lower?
Yeah, that makes sense. Yeah.
Yeah.
But it's a great checklist, and I think it's important to be able to come to the market. You have your sort of plan, even if you're not using the concept that we've gone over today.
Yeah.
It's still important to have a checklist that matches the conditions of your plan, right? So then that way you're answering these questions and you already know, and it allows you to do exactly what you set out to do today in terms of identifying low probability to high probability days.
Yeah.
I think it's important to do that because otherwise, if you come into the day and just freestyle, you don't really have a checklist and you're not really trying to identify if it's a good condition day or not, it's easy to kind of treat every day, as we talked about earlier, like just treat every day as a trading day, and waste capital and mental energy on trades that just are not worth it.
Exactly. If you're like trading every day looking for a home run, then you're likely not going to find it because most of the times price is not trending. It's like I'd say like 30% of the time, 20 to 30% of the time, price is trending.
Exactly.
And the other percent, it's ranging. And so if you're going in every day looking for that home run, then you're not going to find it most of the time. Exactly. And if you're confused about price, basically what we say is like, if you can't figure out the drawn liquidity, then you are the liquidity. That's a great thing to remember.
It is, yeah.
We can just go ahead into examples, I think.
You go on the charts, you can see this there.
Charts.
Amazing.
Let's take a break for a minute there, guys, because I want to tell you about our incredible partnership with propfirmtrader.com. Majority of you out there are prop firm traders. You're using prop firms to leverage your trading skills to be able to get more capital and to be able to absolutely change your life. So what's important to you? To be able to find the right challenge for you with the best firms and, most of all, the best prices. And that is exactly what propfirmtrader.com does. Propfirmtrader.com allows you to compare prop firms, be able to find the best challenge suited to your trading style, and get you the exclusive best discounts in the entire industry so that you're paying the cheapest price possible for your prop firm challenge. So on propfirmtrader.com, you'll be able to use filters to be able to do that and find the exact challenge for you, be able to find your favorite prop firms. Just look on screen right now. You can see futures firms, you can see CFD firms with offers up to 50% off, which is incredible. And you can also see Alpha Capital there with a one-step challenge with 25% off using PFT1. And there's so many more exclusive discounts only on propfirmtrader.com. It is the go-to site for all prop firm traders out there. And one thing I'm really excited about that I personally helped to organize was the giveaway of giveaways, the 7-figure giveaway, just through purchasing your challenges for the best price through propfirmtrader.com. Every single week, you will automatically be entered into an incredible giveaway, a collaborative effort across all of these firms on screen, between 100 to 200K accounts, over 7 figures. It means that one person every single week who's made a purchase through propfirmtrader.com will be getting 7 figures in challenges that can completely revolutionize your trading journey. Again, all you do is for any of the firms on propfirmtrader.com, use the code PFT at checkout, and you will automatically be entered every single week. The link for propfirmtrader.com is in the description below. Now let's get back to the episode.
So this is pretty much an example of this easier distribution day. I took this live on my live stream. This is a CPI day. And you can literally see, like, this is 8:30 and this is the news release. So you can tell, even when you're back testing things, that you can easily see without even checking that this is a news release day. And this is the manipulation leg, and I waited for, you can see before, it's obviously, this is accumulation, pretty much what we just drew out.
Yeah.
Manipulation, right? And I waited for more confirmation here. I waited until it broke a swing low with a fair value gap. This is pre-market still, so this is after 9:30. And yeah, this is where I was able to trust the market structure because I managed to understand this is a manipulation leg.
Yeah.
And now I was able to see here, okay, we're respecting these swing highs, and then we broke this low with a fair value gap here. I waited for a retracement here, and I could have just shorted here, but in that situation, I think what happened was there was a 1 minute FEG here, and this is still on a discount of this leg, right? It's below 50%. This is a nice premium one here, actually. That would be actually beautiful to just, you could have just went straight short here, trusted the stop up here. I personally just waited for us to disrespect this 1 minute bullish fair value gap here to invert it, and then I just entered, and I put my stop here because I believe that was going to be rebalanced to this fair value gap, and I believe this was the next swing high forming. I took some profit here because that was over 2R, and I waited until distribution down here, and I was able to take a lot of money from the market there. So I made about, I think, $2,600 there, shorted here from 20,850, and I took the rest off at 750. So that was a 100-point trade on NASDAQ.
It's 15 minutes.
Yeah, in 15 minutes. That's what I was saying. It's like the easiest trade to do because it distributes the fastest.
Yes.
You're never really in any kind of emotional drawdown as you're waiting for price. If price is consolidating, and it's the worst if you're in a break-even trade and it hasn't moved.
Yeah.
Those are the harder environments. But here
Well, you can see if you go down as well.
Yeah.
If you go down on the trade seller here.
Yeah.
As in scroll down. Yeah. If you scroll down here, and then you go on the charts and running P&L.
Yeah.
This is what we love to see.
Oh, exactly.
Minimal drawdown for like a minute or two, and then straight into profit. It's incredible.
Yeah, exactly. So you're not really holding your breath for a long time.
No, yeah.
So those are the best trades that work out for me. As I notice, I'm in profit like immediately, right? So for here, the entries don't really matter nearly as much if you're in a distribution mode. If whether you're going to go for that retracement above 50%, or whether you're going to go for after an inversion, or maybe another swing low gets taken out and you can get in. It doesn't really matter nearly as much as you know the direction and you know where to put your stop, as long as it's a good RR. And you're good to hold for further targets, right? So I took a little partial here at that new low of day.
Yeah.
After it broke it a little bit, and then I took the rest off here. And that was that trade. It was pretty easy. It was, like I said, it's pretty much how we drew it out earlier, which I love. And this was like quite the manipulation, but you saw that huge retracement, and then it started breaking lows. You can recognize that.
And it's great how you waited for that displacement and waited for that low to get taken before entering, because as you can see with just that one leg there where it ends up taking that high. Imagine you tried to enter there instead.
Yeah, exactly. With this, I typically I think right here was probably a divergence with ES, where ES didn't take out this high.
That makes sense.
Which we talked about before, where the divergence will work out. And personally, a lot of times I like to wait after 9:45 to enter. This was a beautiful one during the 9:50 to 10:10 macro. Pretty much a standard silver bullet entry. Basically, so typically why I waited a little bit here was I wanted more confirmation, and we kind of had these equal highs here, and typically most of the time I'm actually waiting for after the first 15-minute candle to form a lot of the times, and you see that we did like kind of wicket. We still didn't take out this high here, and we did break this low from that CPI surge higher, and we broke pre-market lows, and this was pretty much indicative here. We didn't take out this high with a displacement there, and then we completely dropped below this one. So this looks like a clean manipulation to the upside, is my point.
Especially with the accumulation before as well.
Yeah, exactly.
See, it's quite extensive.
Yeah, exactly. So that's one example. And then we can just go to the next example. Is actually a bullish example.
Nice.
It's actually the next day, I think. Yeah, this is the next day, PPI. So that's another 8:30 news
One of the
release
favorites,
here.
yeah.
So here, that day CPI did drop quite a bit and ended up taking out this daily low and into a daily FEG, into a daily fair value gap. And we had this huge, like I said, this huge push down lower. And we started showing even before the New York opening session bullishness. So this is where I would look for potential retracement then to 50% of this leg. If we go to the hourly, this is an hourly fair value gap in a premium. So here, let's just check that out. And you can see again here, this is the news release, PPI, this wick below all these lows here. Again,
That's your
accumulation.
accumulation,
And this is the day before, by the way. This is kind of ugly, especially. Before, it's just like, actually the day before was that huge drop and then it hit that level and then the afternoon session, the afternoon session started chopping. Asia and London started chopping. And then you see right here, this is on the 1 minute. That's the 8:30 news release. Ooh. Okay. That's the 8:30 news release, this huge wick to the downside. A lot of times, I'm thinking that's the manipulation leg, especially on those kinds of days.
Yes, of
where you're
course.
looking at the 9:30 open here. And I actually had no idea what we were doing. I waited until up here to get involved in my longs because here I didn't really love, you see all these wicks and there was no clean, I'll mark out a high here personally. And I really like a FEG lined up with it. It broke this high anyway, actually, and there's no bullish fair value gap for me to get involved here. Upside, again, after 10 a.m. here, we took out this low from this leg. We manipulated here, took out this low, and I knew that I had more upside targets here on the hourly. For the buy side, when I looked, this is important. You're looking at hourly and like 4 hour typically targets for if you want large moves. Right?
Of course, yeah.
Right. If you want a large move, you're typically looking for that as your target. If you're looking at a 15-minute or a small time frame, that's fine too. If you're entering on a smaller time frame, but how I like to line things up is 4 hour or hourly point of interest for targets, or even higher daily and weekly, where you really get those huge moves. But for my entries, the structure shifts on the 15-minute and then entries on the 1. So you could actually see here, we made a clean 15-minute fair value gap there at 9:45. And then this is actually a huge thing right there. Yeah, we came back into this 15-minute fair value gap that displaced above these pre-market highs. And we wicked that. And I anticipated, okay, that's manipulation. And I'm going to get into... this inverted this little 1 minute.
You see that displacement, that's strong buy.
Let me just see, is there a rectangle?
Normally it's
Scan box.
where the brush is, I think. Yeah, down just there.
Oh, perfect. Yeah, let me put that as a favorite. Sorry. Thank you. I always get, okay, so yeah. Oh, I love that purple. I'll put it as purple. Purple shades out. Oh yeah. So that was clean. That was a 15-minute sweep liquidity retracement into that 15-minute fair value gap, and the price looked super bullish, and I anticipated that's manipulation. We had this little inversion here to look at there, this tiny inversion. So I actually just entered at the closure of this candle, or you could wait for that retracement into the 1 minute fair value gap created here, and that was actually nice. And I really noticed here these wicks were beautifully wicking and holding the upper component of this. Yeah. And that, again, if we look down to that running P&L, like how much drawdown was I really in? Negative 100, right, for 1 minute. And then here, mostly upside, right? So those are the easiest,
again, like what,
valid days.
It's probably about maybe less than 10 minutes, $2,200. It's incredible, or to the end, maybe about 15,
exactly,
20.
exactly, yeah. So how many points was that from? And this was like, not that points even mattered. The RR always matters, but
yeah, of course.
But you could see there with your winners being much larger. I mean, with the loss being for such a small amount of time, you already know you're on side when something like that happens. By the way, that's how I read price a lot of the time. It's like after I enter, that's how you know you're in a high probability environment. Actually, is how long are you in drawdown for? If it's only a tiny bit and a tiny bit of drawdown, it's more likely you're on the right side.
Yeah.
It actually gives you a lot more patience to hold to the full target of your trade.
Definitely.
Because if you know that and you're noting that, and you typically note, like you saw in the last trade also was like 15-minute trade. I know my trades like that are typically 15 minutes long. I'm not going to cut it at 3 minutes and it barely moved.
Exactly.
Or even if I'm in slight profit at the 5-minute mark, right?
Is that where like the reps and the data really helps to be confident?
Yeah, that's where exactly. Really noting that all the time. Like, how long does a price typically take to go to my target in these easy liquidity run conditions? And then noting, okay, and also in this environment, once we leave this and we make a new high, then I can trail my stop to this low easily, then I'm fine with that because that's a low resistance liquidity run environment in those like high probability conditions. It's going to respect that low that it just made before the swing high.
I love the inclusion of the 15-minute fair value gap there as well in terms of like then having another manipulation to continue higher.
Yeah.
It just shows the layers because it's not like it's complex. It's not like you're going 5 minute, 15, 1 hour, 4. It's saying, okay, we've had the manipulation. We haven't managed to enter down here at the lows. We've now seen displacement. And now what can we see? And it's just a simple step of, okay, here's a fair value gap. On the lower time frame, we've then seen a displacement and sort of the buy step back in. Now we have a fair value gap to enter from, and then we're just looking for our move, right? And within 15 to 20 minutes, we have our move.
Exactly, and that's what I'm talking about. Like those are the easier days to trade because it didn't require too much thought from me, and price showed its hand already with that manipulation. It showed its hand with that beautiful displacement to the upside. So it gives me more confidence to enter and just hold for the trade. I think a lot of people might have trouble holding for full targets and things like that. And they ask, like, how did you hold for this much?
Exactly.
Et cetera. So that was a good trade as well. So next, let's see here. Does this say? No, this is a different day. So this is another day. Let's see here. I think this was GDP. Yeah, this was, let's see. And again, like this day actually a little bit difficult. This day at GDP release, it kind of wicked both sides there. And then we started surging a lot higher at 9:30. This is actually kind of cool. I don't know. I was super patient in this trade because I waited until the 10:50 macro, which is 10:50 to 11:10. Because I suppose I didn't have like a clean drawn liquidity beforehand. Right? I think I was bearish actually. Yeah, this is an example where I'm bearish, but price is not showing me any kind of entry here for bearishness, so I'm waiting. The third trade here, this is I think GDP day, and I just I'll have session highs marked out. This took out a previous daily high, this Wednesday high at that peak, that surge there, and it looks like I waited for a good amount of confirmation here for the downside during the 10:50 macros. So when I'm talking about those macros, those are like the endings of those hourly candles.
Oh, got you.
So like 9:50 to 10:10 and start of the next hourly candle. So a lot of times there's like theory about like, okay, that's the end of the distribution and going into the next hourly candle, and you're getting into that forming essentially, and those are pretty good hot spots, and it seems like those are some good. I mean, those are my favorite kinds of trades, and those are really silver bullet, nice entries. And here, this is a GDP, and it looks like we wicked both sides. And that over there, that's like pretty directionless. Like that doesn't look like that clean of a manipulation. Afterwards here, there's no distribution. Here, it does seem like, it could have taken a long here if I was still bullish, but it seems like here, looking back, I was probably, I was looking for some shorts there. Especially after we cleanly displaced below this low here. So after it took a daily liquidity level up there, it did have a nice displacement here to the downside. And these are equal lows from pre-market that I went for there. And then this is a data low. I think that's probably where I went for the second. We'll find out actually. We'll see. Maybe it did hit it, or we'll see where I took that last profit at. So that's kind of cool that I did end up taking near the low there, 957. It's pretty close, maybe like midpoint of this where I took off that last runner. So essentially, yeah, I waited until that clean structure break to the downside. After, if you're bearish, over here, I'm looking for a low of a displacement. This would have worked out actually, but I don't think probably I was
risk-wise.
It was risk-wise. This was clean. When you see those large down closed candles,
Exactly, and you're sweeping the lows to the left as well.
Yeah, those equal lows to the left after jagged highs. This is probably like a day where it wasn't as clear at the beginning what my bias was, because I waited quite a bit. And let's see here for this, it did consolidate quite a bit.
Yeah.
So
not like the other straight to targets.
It did.
That's the reality, right?
Yeah, it did consolidate, but like again, the
minimal drawdown there. Yeah.
Not too much. While the distribution was definitely worth it there. So looking at that, that's a jagged high. Yeah, and having a jagged low here, but this took like a daily high on the left.
Yeah. So is that example we drew out earlier? Yeah,
exactly. Just like that example. So waiting for that displacement below more lows and seeing these equal lows here and a data wick low. Sometimes you see that kind of, I'll just make this larger here. If you see this wick low here, that's oftentimes also an area I would go for my targets. I think I probably let go of this after seeing that it came really close, and I'm just like, all right, that's good enough, because I did take it off here just before that, and I just was like fine with that. But maybe later on it did end up hitting it, but that's the whole point, is like you're waiting and you're taking your partials here, and then trailing. So then after I distributed it to here, then I put my stop pretty much break even at that point, right? Because it should not, if it's actually a good low resistance environment, then this high that took out the swing low should remain intact. So I'm then moving my stop there. And let's say I didn't take that off, then I would be stopped in profit or break even on the rest of the trade. It looks like the rest of the day actually did chop around. But that's the point, is kind of being like, okay, then we're not continuing lower for more lows after that, and that's fine. You took some money off the table.
Yeah.
But yeah, that's pretty much it. You look at the jagged highs and lows, and if you were still bullish here, and maybe some people entered here for that, I think that's fine. But or if you're bearish, there's some other entries too. But that was my trade. Is that I waited.
Well, that's what matters, though, is that you have your system, right?
Yeah.
So that you could always find a way to be in that trade, every trade.
Exactly.
And that's what some people make a mistake of.
Yeah, I typically will review other things on my stream. That's what I'm talking about.
Yeah, I can imagine.
I'm always like, okay, these are the
possible
trades that were there today, that day. But the point is kind of, even if you took a loss, maybe on thinking you're going to go take more upside, and that'll happen on my streams as well. Sometimes I'll think like, okay, this is taking this high out with a displacement, and going on that retrace, and that's totally possible. Then you're actually making up your money on the downside. On the flip side, after you see that, that's why I'm saying, like, okay, it's okay to take a second trade is essential.
Well, that's why you have that rule.
Yeah, exactly. I'll put my stop where the market structure shifts.
Yeah.
Right. So at that swing low here, after we broke that with a displacement, then it was clear, okay, we're going lower.
But luckily in this case, it was just the short.
Yeah.
And then back.
But anyway, it did.
But it makes sense, though, because obviously having that two trade rule allows for that, number one, because equally in this case, it could have maybe popped higher, hit a stop, and then continued lower, and then it still gives you another chance to get back in. But having that two trade rule is good as well, because if you do take two stop losses, it's also controlling, making sure you don't have further downside, just be able to come back the next day, fresh slate, or wait for the next AMD to form and take it from there. But phenomenal free trades there, all showcasing the exact model from what we went over, showing as well how, to be fair, what the beauty of it is as well, how each one of those was slightly different. They were the same trade in terms of the concept, but they were slightly different in how they look. And that's just the reality of trading. It's so easy to think that we draw out this concept and this is how, picture perfect we can draw it. But in reality, what it looks like on the chart when you have your candles and you have your, your different highs and lows, etc.
Yeah,
it will look different. But it's about being able to identify the concept, identify the high probable days, as you clearly done today, and absolutely incredible.
Yeah, thanks for having me. And honestly, I think, yeah, I staying out of trouble is the hardest part being a trader, because those are days like your P&L slowly paper cut, and those can turn into multiple paper cuts, turn into gushers, and then that home run just takes them away and puts you back to break even, and then you don't feel as good about it. It's about building up your confidence so that you're able to level up your trading and really just put the confidence behind yourself and stick to your process.
I love that. Tanja, thank you for being here today. Everyone at home, drop a comment of your biggest takeaway from this episode. Any questions, drop them in the comments below, and Tanja and myself will be taking a look. Links for Tanja will be in the description below, so make sure you check that out. Hit like, hit subscribe. Other episodes are on screen. We've been Chart Fanatics. Take care.